If we don't believe we can help you kink the curve on your trajectory and improve the odds of success for you, we're not going to invest. Here in this AI era, the more you use the product, the more expensive it becomes to serve that customer from a gross margin perspective. And so margins are also going to be reevaluated, and what best-in-class margin profiles look like for software is going to change as well. This is the same story that's played out in technology over decades, right? 10, 15 years ago, it's like, well, what if Google does this? What if Facebook decides to do this? What if Apple decides to do this? And now it's what if OpenAI does this? What if, Anthropic does this, and so on? I think there's going to be room for both. That the models we're working on today are the worst models you will ever work on ever. I think trust is a moat. I think that customer trust and belief in you and understanding of what you do and faith that you will deliver on what you said and not overpromise, underdeliver, I think is a big moat. Instead of selling a product that we're making, we're effectively selling money.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Rishi Taparia with us. Rishi is a seasoned operator turned investor who brings a unique perspective from his time in the trenches at companies like Poynt and Legion. Now, as the co-founder and general partner at Garuda Ventures, he invests in the next generation of B2B SaaS startups. In this episode, we dive into the massive shifts happening in the world of B2B SaaS thanks to AI. We'll explore how the rules of software are being rewritten, what a real moat looks like in this new era, and why customers' trust might be the most valuable asset for a company to have. Rishi shares his team market product vision framework for investing and offers a candid look at the emotional roller coaster of building a company from the ground up. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help venture capitalists, asset managers, allocators, and family offices in starting their own podcast and building a strong brand. Podcast 10X is designed in a way to work well with the busy schedule of investors, where we handle every aspect of podcast production so you can focus on investing. If you're looking to build a strong investor brand, starting a podcast should be right up your priority list. It's the only form of marketing where you can showcase your strong network, in other words, access to limited partners and founders, and grow that network further. And contrary to what most people hear, it's still very early to start a podcast. There are at least 10x more newsletters and 1000x more blogs than there are podcasts in this world. You can learn more about our podcasting services at podcast10x.com. I'll make sure to add the link in the description below. Enjoy this episode. Hey Rishi, so good to have you on the VC 10X podcast. How are you doing?
Very well. Thank you for having me, Prashant.
Yeah, it's a pleasure having you on, and finally I get to have you on my podcast. So
Yeah.
it's great having you on. Yeah. To start things off, can we first have your operator story and how that experience at companies like Point and Legion help you now as an investor, and also helping your portfolio companies also do things better at the earlier stages of the business?
Yeah, absolutely. So look, I started out my career in technology first as an investor. Was at Scale Venture Partners, an amazing firm, mostly focused on, at the time back in 2010, post product market fit enterprise SaaS companies. Businesses like Box, HubSpot, DocuSign, RingCentral, all which I had the chance to partner with and work on. Then went earlier stage to Matrix Partners, and so now it's early, very early stage companies. At the time, Series A was considered that very early stage, and so these are businesses like Oculus Rift, Apartmentless, Bugsnag, Canva, which I drove the investment for in their seed round back in 2013. And so I spent 4 years on the venture side, and while that was an amazing experience for me, I always felt like understanding what it would be like to be on the ground, kind of in the trenches, so to speak, building companies would help me help founders better if in fact investing is what I wanted to do when I grew up, so to speak. And so I left Matrix and joined a portfolio company at Matrix called Poynt. We were building payment terminals, trying to reimagine the dumb gray brick as a smart, connected, and programmable device. I joined as the seventh employee and first business hire. And basically, over the next 5 years, anything that wasn't product or engineering fell into my wheelhouse. And so I got to live that experience firsthand of scaling up, you know, HR, sales, marketing, finance, legal, accounting, growing the team across multiple countries, selling customers in multiple geographies. And by the time I left 5 years later, we were serving 130,000 merchants, doing about 13 billion in volume on the platform. And that experience proved incredibly informative for me because it helped me realize a few things about myself. One, I love working with early stage founders on early stage problems. And two, that I'm a glutton for punishment because all I want to do for the rest of my career is work with early stage founders on early stage problems. And so after Legion or after Point, I went to Legion, company in the workforce management space. Again, similar role, early stage, kind of on the exec team, reporting directly to CEO, responsible for kind of a lot of the running of the business and the strategy. And those two experiences just let me see exactly what the early building looks like. Because at the end of the day, when you're an early team, you have to believe in something that most people can't see. And there's a vision that the founders are laying out and that you're working toward. And so much of it is just going from a deck and a dream to building a team, building your product, getting into revenue, and setting the business up for scale. And so after I left Legion and then went back into investing and started Garuda and went full time with the fund, that's basically the entire genesis of what we're trying to do. Because nobody believes, how can we be that first true believer investor? And given our operating experience, myself at Point and Legion and my co-founder Arpin's 8 years that he spent at Okta, how can we take all of that insight, knowledge, learnings, and that of the broader Garuda community and help founders go from a deck and a dream to building team, building a product, getting into revenue, and avoid the many, many mistakes that we have made ourselves in our careers.
Absolutely. So proper operator investors here, right?
That's right.
Awesome.
That's right.
And you have this particular focus on B2B SaaS, right? B2B software. Uh, and when you're talking about your investment thesis, you've talked about concepts like intelligent applications or the new perimeter, right? So can you give us an insight on some of those, and also what does your broader investment thesis look like?
Yeah, absolutely. Look, ultimately for us, where we play is the kind of very first round of financing that a company is going to go raise. We are built to help you from that early stage and getting the foundation laid for your company. Where we invest is largely reflective of our own experiences and the broader networks that we have and our ability to help. Because at the end of the day, when you're investing so early, again, it's the early investors, the founders, the early team, like those are the only people that are actually around and give a hoot about what you're doing. And so for us, we very much believe in delivering value beyond capital because we want the founders to make sure they're getting more than just money, especially in a market where kind of capital is a commodity. And so if we don't believe we can help you kink the curve on your trajectory and improve the odds of success for you, we're not going to invest. It's not right for us to just occupy space as a line on the cap table for you as a founder. And so as a result, as you'd expect, given my background in fintech and kind of in kind of enterprise applications, Arpin's experience at Okta in the cybersecurity space, we generally invest across kind of three core themes. One being intelligent applications, business software. How do various businesses, either horizontal or vertical, run their workflows, make their decisions, leverage software to help run their businesses? We look at kind of commerce enablement. This is money movement, payments, e-commerce, infrastructure, and the like, given my background at Point especially. And then we look at kind of modern infrastructure. This is, cybersecurity, infrastructure, dev tools, and data, which Arpin spends a lot of time on. And these are areas where we have deep insight, expertise, kind of perspectives on the future, and the ability to introduce founders to early employees, early design partners, early customers, and the like to again help kink the curve on the trajectory of the business and provide value beyond capital.
Absolutely. And when it comes to B2B, we are talking at a very interesting time where B2B is going through a certain shift, if I may call it that, because of the coming of AI, right? So there are talks about, okay, whether companies are just going to build their own software because vibe coding is going to get so much easier that you can just spin up your own apps that you want and they're more personalized to your use case, right? The other is that is seed-based pricing still relevant, and so many other discussions that are going around this space. So give me an insight into what are your views on that and how do you look at it as an investor?
Yeah, absolutely. Look, I think AI is no surprise. It's coming for everything, and certainly going to influence the way that companies build software, what they buy, pricing, and all that. And I think we're just in the early innings of this kind of next era of software. But I do think it is just that, this next era of software, and so expectations are going to change, and the way people interact with technology is going to change. But it is largely intended to again give people back time and help accelerate workflows and help people make people more productive. And so while I do think the rules of software are being rewritten from the ground up, I don't necessarily believe that companies are going to roll their own applications and build all of their own software themselves, even though it's gotten easier, only because at the end of the day, when you're running a business, you have to keep the main thing the main thing. And so at and so building expertise and understanding and a know-how on what you're supposed to be best in the world at is going to be even more important, because the competition for your customer, for your business, is going to go up so much more. And so I think what's instead going to happen is you're going to have the ability to have technology be even more hyper personalized for your use cases. But I do think that a lot of the software is going to just be is going to be bought as opposed to built. But the build versus buy decision is going to be a lot more, shall we say, competitive, when thinking about which route we should go, because resource management is going to be kind of so much more kind of deeply evaluated. But I think it's just the next evolution of software, and pricing is also going to change when it comes to the way you know the software is priced. Are we doing per seat pricing? Are we doing usage based pricing? Are we doing outcomes based pricing? Is there going to be a base platform fee for your product and then a usage based pricing on top? Like that's all kind of in flight right now, especially given, unlike with typical SaaS software where the incremental kind of seat or the incremental usage is de minimis marginal cost. Here in this AI era, the more you use the product, the more expensive it becomes to serve that customer from a gross margin perspective. And so margins are also going to be reevaluated, and what best in class margin profiles look like for software is going to change as well. And so, look, a lot of interesting things happening all at once, which is why I think it's a great time to be investing and deploying into this next era.
Absolutely. And when things are changing so rapidly and almost evolving so fast, it also becomes extremely crucial that not just you as an investor are keeping up to pace with the updates and what's happening, but also your founders or portfolio companies. How are they adapting to new discoveries and new launches that are happening every week by these big LLMs as well? And maybe making their own strategy, tweaking it, and adjusting it to now align with the new reality that's much different than what it was maybe a month back, right? So how do you evaluate that aspect in founding teams? That can this team actually sail through this AI wave that's coming?
Yeah, look, for us, one of the key things we try to look for is adaptability, right? Because at the end of the day, the technology is going to change, the market's going to change, the customer was going to change, the buying decision is going to change. And so how do you react to change, and are there is there any evidence of that in your past where you've dealt with some adversity, some challenge, some change that you've adapted to and adjusted for? We also try to engage the founders in conversations about the changing technology. What happens when an open AI or an Anthropic model can do this part of the business very well? What's your differentiator? How do you sell? How do you think about the go to market motion? What's the value that's being created? And can you as a founder articulate a vision of the future and the steps along the way that the kind of market is going to take, and which way you're going to navigate the business given, a set of potential probabilistic outcomes that happen in the market, and how well thought through are you in your domain, in the ecosystem, with the customer, and what is your understanding of the buyer, and kind of what they think about, what they care about. And so, it's all a lot of gut and a lot of unknowns, but, if we can get a good sense of that, and you've been thoughtful about the approach and have taken a kind of methodical approach to thinking through the business, and it probably makes sense to invest. If you haven't, or if we know more about your market than you do as a founder, then maybe it doesn't make so much sense to invest. And so, you know we definitely try and evaluate that, and then we do things within the portfolio as well, just to help trade insights and knowledge amongst the founders. We did how are you using AI within the company session with our founders. We're doing a session on how do you, specifically now on sales, what are the best sales technologies that are being utilized by founders, leveraging AI to accelerate sales, customer success, things like that. Just because trading notes amongst the portfolio is also incredibly helpful, because we're learning, they're learning, and we get a chance to have open debates about what's working and what's not.
Absolutely. Yeah. There's always been this idea in investing that, okay, we are investing in the team and not the idea. And I think that concept is all the more relevant now with so many changes happening. I think the idea might just look completely different 1 year from now than what you started with. But if you chose the right team, then they're going to navigate that too, right?
Totally. No, for us, our framework is team, market, product, vision, in that order of importance. Because if you got the right team in the big enough market, then the vision, the product is going to change. But if you've got the wrong team in the right market with the right product, it's still probably not going to work out as big as you thought. And so TMP is the little framework that we leverage here at Garuda.
Right. Absolutely. And OpenAI recently launched agents, and it is also uh, there are talks that it's going to get into vertical spaces, specialized LLMs for different spaces, let's say healthcare or different verticals, right? And there are also vertical SaaS startups which are built
Mhm.
for specific verticals, right? How do you look at that? That okay, if these big LLMs are going to start earlier, there was this thing that VCs used to say that okay, these big LLMs are going to be like generalist, and we are going to invest in vertical LLMs. They are going to be more specialized than the big LLMs, right? But now what seems to be happening is that these big AI companies are also getting into verticals, right? Does that pose a significant risk to small startups because they are also behemoths with lots and lots of funding at their backing, and they can train larger models much more faster and have more resources in general, right? So, how do you look at it as an investor in vertical SaaS?
Yeah, for sure. Look, I think this is the same story that's played out in technology over decades, right? 10, 15 years ago, it's like, well, what if Google does this? What if Facebook decides to do this? What if Apple decides to do this? And now it's, what if OpenAI does this? What if, Anthropic does this, and so on? I think there's going to be room for both. And the reality is, for these big behemoth, LLM providers, the big names that everyone knows, they care about things that will move billions of dollars of revenue over, and very, very quickly, and not, smaller than that. It's the same thing that, Google could do a lot of things, but if it's not gonna do $1 billion in revenue, it's not gonna matter. And so I think OpenAI, Anthropic, and the like are all very similar. And so while they are certainly going to get, for sure, into more verticals, these are going to be big, generic, broad verticals, like healthcare as a broad kind of opportunity. But they will not be able to, A, move as fast, B, have the kind of insight and the specificity and understanding of the customer. And as a result, I think that still leaves opportunity for smaller companies to go win within verticals. And so you can just know your customer better, you can move faster, you can be more tailored to them. And to my earlier comment about more hyper personalized software and technology that can they can leverage, I think that is an incredibly powerful thing, especially if you're adapting to the customer set more quickly. And so I think that, yes, OpenAI, Anthropic, they're gonna build for big kind of masses of the population. Developers as a great example of technology where they've basically built the best in class software. And so you have had it, like if you're Cursor, for example, that's the real competitor, but you've raised billions of dollars and you're going after, the same customer set as your Microsofts, your OpenAIs, your Anthropics. I think it's going to be similar to that. Like, how can we build in a vertical, but very generically in order to cater to the needs and attract a lot of people, but the specificity isn't necessarily going to be there. The customized workflow is going to be there. And they're gonna rely upon the ecosystem to build those integrations, those capabilities, for the end customer. So, a long-winded way of saying I think there's room for both. And while it's important to think about where the big players could go, I think more important is how do we satisfy the customer need and where do we believe the technology could be in a year from now, knowing full well that the models we're working on today are the worst models you will ever work on ever. Uh, and so the technology at a baseline level is only going to get better. And so is that exciting or is that terrifying for you as a founder?
Absolutely, yeah, that makes sense. And moats is something that is again up for discussion, because what was previously thought of as a good moat is now any longer a good moat. Like maybe a technical moat, it's no longer considered a solid moat, a tangible moat,
Yep.
right? So, what do you think is now considered a tangible moat in the AI world?
I think trust is a moat. I think that customer trust and belief in you and understanding in what you do and faith that you will deliver on what you said and not overpromise, underdeliver, I think is a big moat. Only because at the end of the day, until agents are buying from agents and all software and technology has made everybody autonomous, humans want to buy from humans. And they want to, and I think that people want to know that there's somebody on the other side that I can get my problem solved and my question answered. And I think if you've, again, positioned yourself as credible, as reputable, with good customers that all rave about you, I think your brand matters more so probably than ever before, which is why you're seeing now so many CEOs and founders turn into creators and brands of their own. I think it's all in the spirit of credibility and trust. And so that, you talk to financial institutions as an example, and very candidly, they will say, like, yeah, we're trying all these different AI tools and the like, but at the end of the day, we're probably just going to buy OpenAI. And the reality is because they're spoken about, they've got the first mover advantage and and Sam Altman and the team have done an amazing job of building that credibility and reputation. And so I think it's more and more the moat is going to be customer trust and your go to market differentiation and your ability to hone in on what the customer wants, what their problems are, and how can you solve that such that they get back more time to do with it what they want.
Absolutely. Yeah, that's solid. And one more moat that I've observed, especially in India. So Perplexity announced that they're going to be free in India, right? So what happened then is that most of the people who were pro AI users were using ChatGPT, right? And what happened then is that they had chat histories or the memory of their chats within ChatGPT, right? And now to switch to Perplexity was difficult because it was starting from scratch, and at least up until now it's not that easy to transfer context between different LLMs, right? So a lot of people kept paying for chat gpt even though they had a free perplexity account there. And I think even though that's a case for the pro AI users that are already pro users, but I think what perplexity where it wins is that a flurry of new AI users are going to come into
Yeah.
perplexity, and the same mode of memory is going to help them retain these customers and convert to paying customers once this free period ends after a year. I think that memory as a moat, or maybe context as a moat, that can be a thing. If context transferring is not made super easy, which I
For
don't
sure.
think
Look,
it
I think
will.
that is
Yeah,
for sure. I also think familiarity with a tool, right? And not having to change workflows, find how things work and figure out how do I do the thing that I did over here, over there, which is why I think you have so many of these companies now, and including in our portfolio, going after schools, universities, high schools, and can we get people using our tool when they're kids effectively, because in the same way, I still buy Gillette shaving cream and Colgate toothpaste because that's what I've been using since I was a kid, because that's what my dad used, because that's what hit like that's what happens. And so, if LTV is truly the lifetime of a user, that becomes a very interesting and differentiated monetization strategy and your willingness to acquire that consumer early on goes way up for some of these businesses.
absolutely. Yeah, quite interesting. And investing at the early stages, especially in the current market, is a very difficult job in a way, right? Because there are so many factors to de-risk before making the investments, right? So, what are the key things that you're looking for right now when you're evaluating deals?
Yeah, it all kind of goes back to that TMP framework: team, market, product, vision. But I think that kind of the context of the team. How did you come together? Why is this problem one that you want to chase after, chew glass for a decade, kind of run through walls for, what is it to you? Why are you doing this? What's your why? What's that secret that you have? What's that insight that you have that the rest of the market isn't seeing? What is the technological advantage or the why now for this that means that it hasn't existed before? Is this a new technology solving an old problem? Is this a new technology solving a new problem? How does that all work, and kind of what's your vision for the future, and how we're going to get there? And what is this market? Is it an emerging market? Is it an established market? Is it something that's gonna be new that comes? These are all the questions that we ask and debate internally all the time. And at the end of the day, when you're investing, especially at the early stage, most of the time when we're evaluating opportunities, by the time we're getting to second, third meeting, they're all fairly good and they've checked a lot of the boxes. And honestly, the hard thing is to say no to something, to an opportunity, and to a founding team where you really don't know. But I think the lesson that I've learned over 15 years being in the valley is you don't have to swing at every pitch, so to speak. And so you're allowed to say no and wait until that perfect kind of down the middle strike comes, and then swing at that. And so for us, it's just about being disciplined, being thoughtful, providing a great kind of customer experience, so to speak, for our founders, and the founders that we have the privilege of meeting, but really only deploying when it feels like you're checking all the boxes and this is a company that you have to back and a founding team that you have to partner with.
Absolutely. And within AI applications, there are all different types of it. Uh, what do you like the most, or is there a specific theme that you think right now is overlooked or is not hyped enough, but you think can be a good opportunity?
Look, there are a number of them, but admittedly, I won't pretend to be smart enough to know exactly where that's all going to shake out. At the end of the day, we're founder first, not kind of thematically focused or thesis driven. We have perspectives, but we are not going to try and force those perspectives onto the founders that we meet. We're looking for the founders to tell us where the world is going and then decide whether we believe in that vision for the future. Only because I've seen the mistake being made a lot where an investor has an idea of what's going to happen and how the business should be run. The founder has an idea of what's going to happen, the way the business should be run. They both think they're speaking the same language and have the same vision and the same vision and mission. And then after you invest, you realize, oh no, we're actually diverging here. And that creates a lot of tension because the investor thinks that he or she is correct and the founder thinks that he or she is correct. At the end of the day, it's the founder's company. And so we as investors are in service of our founders, in service of our LPs. And our job is to serve as advisor, fiduciary, and offer perspective from the market and from our own experience that helps inform the decisions, but the founders have to take the decisions. And so, as a result, we have a few areas where we're spending time in, uh, probably more heavily than others, but we're waiting for founders to tell us where the world is going.
Absolutely, that's a great approach. Uh, how has your view of commerce infrastructure evolved since your early investment into Canva, and what foundational place do you see emerging next?
Yeah, look, I think Canva was a great example of an amazing team with a very thoughtful and laid out vision and articulation of the future, and an ability to adapt to changing technology that allowed them to continue to scale. Like, mobile was just coming when we invested in Canva in a real way. The iPad had just been announced. Now in this AI era, they've pivoted and not pivot, but added all of this AI now to the core product. And I think from an onboarding to AI perspective, they are amongst the best in the market as far as helping people understand the power of AI and doing so in a friendly and approachable way. And it's just, but they've stuck true to the original vision and mission, empower the world to design. And so that's they changed the game in terms of, and set the bar in terms of what it means to build a great kind of business. And that's one that will likely go public here in the next few years. In terms of, I think what's changed a lot is, I think user expectation has changed, and consumer expectations have changed. And so no longer, I think, is it acceptable for me to search on a site and look for kind of black pants, and the site knows that I'm 32 waist and a 34 inseam, and shows me products that now don't have the size in stock. Like, this, like, if you're still doing that, that doesn't make any sense. Why do I have to tell you my full address and my city and my state and my country and then my zip code? It shouldn't happen. And so I think we're getting into a web that is much more personalized, much more tailored to you. And as a result, the products that you're seeing and the price points that you're looking for and all that, I think are gonna the consumer demand is gonna uh, insist upon seeing better experiences that are more for me than for the general purpose user. And so I think that's where commerce is changing a lot, and the way you interact with your consumer is changing a lot, and how you have and the infrastructure required to power all of that is as a result needing to get upgraded in order to deliver value and convert a customer in a much more hyper competitive set of products. You're looking for Lululemon pants, you're going to get targeted 7 different ways from different companies that are all building better quality, lower cost, better durability, sustainably produced. And so we're all trying to build these profiles of the user that exists in the shadows that will hopefully help drive a conversion. And I think it's going to get even more competitive. And so as a result, you have to be even more personalized.
Absolutely. Yeah, that's absolutely hitting the nail on the head that the web is going to get a lot more personalized than what it is today. And I think businesses need to build while keeping that in mind that we need to cater to personalized needs now, not just generalized needs, right? And how do you understand the personalized needs is what you need to work on, right? So something you talk about a lot is that we try to be first call for our founders, right? How do you build that credibility among your founders? Because obviously founders have a bunch of different advisors, different investors who all claim to be good advisors, right? Or want to give advice. So how do you get to be that first call investor for your founders?
Absolutely. Look, ultimately it's all about trust. And I think trust is established in a number of different ways and over time. But I think for us, it's all about show, don't tell. And so we say we're going to deliver value to you by way of introductions, by way of sharing knowledge, by way of customer connections and the like. Um, we better show up and do those things and then document those things for you so you remember. And so every quarter at the end of every quarter, each of our teams gets an email from us saying this was the support and review. What else can we be doing to help you achieve your goals? Where else should we be leaned in and spending more time so we can help drive value for the business? I think it also comes from an empathy for the journey and an understanding that in some cases founders want answers. In some cases, founders just want an ear to listen to a half baked idea. In some cases, founders want help making a decision and want us to kind of guide them there. And so I think having an understanding of the situation and what's going on and being able to bring perspective and not, I think, badger founders, not hammer founders, not berate founders when things go wrong, uh, also helps build that trust. And for us, that just comes from an understanding, having been there and done that, of the ups and downs of building a company. At the end of the day, it's an emotional roller coaster where you can be high, super high up, customer just signed, you just closed the candidate. This is amazing. And then literally the next hour, it's like, oh, our VPN is leaving because Meta is giving him a great offer and he can't turn it down. And now also, what are we going to do? And we've ridden these waves ourselves. And so we understand what it's like. And for us, if we can help kind of modulate that emotional roller coaster and keep founders from getting too high on their own supply, while also not getting too sucked into the vortex and steal them and for what's to come, and allow them and help them demonstrate the best version of themselves to their employees, to their customers, to their investors, then we've done our job. And again, I think that comes a from building trust, which starts from genuinely caring about them, and then delivering on what you say you would, and that's what we try to do on a daily basis.
Absolutely. Yeah. Founders are firefighting 24/7, right?
100%.
Yeah. And Garuda Ventures also happens to have its own podcast, which is
Yeah.
called Brick by Brick, right? What's the central message that you are trying to drive through this platform? And also, how does that reflect the kind of firm you're trying to build at Garuda Ventures?
Yeah, look, our thought behind the podcast to begin with was, as early employees ourselves, we know there are so many great stories and lessons that come from some of the early stories of company building. Whether you're an early employee, you can be a founder, you can be an investor. And so, how do we, share some of these stories that are not necessarily covered in the tech press, or not necessarily as widely known, but have good lessons that all come back to the same themes: grit, scrappiness, determination, the power of a team, uh, that could inform, for a listener, some of the decisions they're thinking through, and share the fact that you're not alone. Every company, no matter how big or how small, has gone through some of the same things, and so there's shared wisdom in that. And so that was the genesis of the pod, for us, because great companies are built brick by brick, and all of this, hype around overnight successes really is not overnight. It's a bunch of work and a bunch of late nights and a bunch of years in a lot of cases that led to the overnight success happening. And so, how can we share some of those experiences and stories with the audience, and build hopefully a listener base of founders, early employees, and people who the stories resonate with.
Absolutely, yeah. And the thing I love about your podcast in particular is that you bring on some people who have been early employees at those companies, right? So what happens is when a company becomes successful, gets unicorn status, and so on, or IPOs, the founders often become the poster boys, right? And
Of course.
the early employees who actually played almost as crucial a role, did all nighters along with the founders,
Oh
they don't
yes.
get the same amount of spotlight. So you have had some of those guests on the podcast, so that's a good thing, and they have
No,
a
I
unique
absolutely.
perspective. Yeah,
100%. Look, I
for
think the early employees are the unsung heroes of the startup ecosystem in general, because you're taking on, not all. but certainly a lot of early risk. Your upside is not going to be nearly as large as that of the founders, but without the early employees, there's no company. Uh, but you do it for love of the game, you do it for autonomy, you do it for more control, you do it to follow whatever your reason. You're doing it knowing the risks, or hopefully knowing the risks. Uh, and the calculus almost never makes sense, but you do it anyway. And so I think as a result, how do we give early employees their flowers as well, so to speak, and share some of their stories and put them in the spotlight too.
Absolutely. Great work there. And talking about the rapid advancements in the AI world, and as investors, as a VC in particular, you have so many roles to play. You're also looking at new deal flow coming in, evaluating that. You're also fundraising for the new fund, and so many developments happening in the AI world, which are going to directly impact how you make those investment decisions, right? So, how do you keep up with all these different things happening at the same time? Give me an insight. How do you manage time and appropriately allocate time to all these different things?
Oh man, if I had the answer, I would share it. Honestly, it's a work in progress. I think there's not enough time in the day to do all of it, and so it's just how do you ruthlessly prioritize the things that matter for you and for the business? Like at the end of the day, a venture firm is a business, right? We have a budget, we have our goals, we have OKRs that we want to meet. They just, instead of selling a product that we're making, we're effectively selling money. And so it's how do we do that successfully and authentically and deliver value to all the constituents that are part of this community that we need to pay attention to, and need to continue to kind of harness and cultivate. And so we generally, as a small team of two, are constantly talking to one another, Arpin and I, and try to block our weeks off such that we are making sure we're taking care of the operational aspects of the fund and the firm building. We're giving ourselves space to do new meetings, meet new people, allow serendipity to hit. We're giving ourselves space to read and research and engage in conversations, and then just constantly sharing back and forth. But it's by no means a kind of scientific approach that we've nailed or anything like that yet. Hopefully, more AI comes and helps with a lot of the blocking and tackling of managing the firm and the fund that we're doing a little bit manually now, and so I'm excited for that. But how do we just get leverage on time to basically do the things that we're uniquely qualified to do, and offload some of the tasks that are more commonplace. And we're supported by an amazing. We've got a couple of executive assistants as well. We've got an amazing team that supports us at our fund admin, at our legal team or banking team, and so it's certainly not just the two of us. But how do we continue to get scale and leverage as we grow is something we talk about constantly.
Absolutely. Thanks for giving an insight into the hectic schedule that you have to manage through, right? Last question before we move to the rapid fire round. This is, what are some exciting portfolio companies that you've bagged that you'd like to mention on the podcast?
Oh, asking me to choose between my children. Look, I think that there's a bunch of great companies that we've had the good fortune to partner with. A couple I'll call out. FlexPoint is in the MSP space, building basically the financial operations stack for MSPs, both with payments and understanding accounts payable, accounts receivable. They're off to the races. They just raised their Series A. Uh, an amazing execution driven by that team. I'll call out Archive Intel in the financial services space, doing compliance and archiving, leveraging AI for financial services companies, helping them more easily communicate with their clients, and giving their chief compliance officers more ability to leverage AI to do things like comply with SEC orders and requests for information. Arcade is building the authentication layer for AI agents, help making sure that agents have the appropriate access to the right tooling, right context, payments, and the like through their platform. Alex Salazar and team over there. You look at a company like Crossville that's helping e-commerce brands show up higher in AI search results with the kind of Gen AI SEO, so to speak, and seeing good traction. So, I mean, the list goes on and on. But those are a couple in the portfolio that we're excited about and certainly that are doing great work.
Absolutely. Thanks for sharing those. Now to our rapid fire round, wherein I'll ask you 6 quick questions about the investing you're doing, and you have to give 6 quick answers. All right.
Done.
So the first one is, what are the sectors and regions you invest in?
We are B2B focused, and so if there's a business buyer with a budget and a problem, fits into our scope. Usually investing in North America. In most of our companies historically have been in the U.S. We've got a couple of portfolio companies in Canada. We've also got a founding team in Israel, founding team in Australia, and a founding team in the UK.
Awesome. What's the typical stage of investment?
Pre-seed as early as a deck and a dream. We are typically going to be investing in the very first round of financing that a company raises, and usually for us, investing between $500,000 to $1 million, or maybe up to $1.5 million, and helping co-lead that round, catalyzing the kind of financing round, and in some cases even catalyzing the formation of the company when we meet founders super early and with just an idea and not even having formed the business yet.
Got it. Do you lead rounds?
Yes, we lead, co-lead. We'll also follow. So kind of we're pretty flexible there. At the pre-seed stage in the portfolio, we've led about 70% of the time, and or led or co-led 70% of the time.
Awesome. What's the typical check size you put in? I think you mentioned
But
that already.
yeah, between 500,000 to 1 million is
Okay,
typical. We'll flex up to 1.5 million to 2 million, depending upon the situation.
got it. Where can founders get in touch in case there's a direct way?
Our website, you can also email partners at Garuda.vc, and that hits both of our inboxes.
Awesome. Where can our listeners follow you?
Got very active on LinkedIn, and so follow Garuda Ventures as well as myself, Rishi Taparia, and my co-founder Arpan Punyani. We also have our newsletters, and so it's both on Substack. Mine is taps.substack.com. Arpan's is arpanpunyani.substack.com. We've also got our newsletter from Garuda, garuda.substack.com. The Brick by Brick podcast. I encourage you to subscribe and get great conversations with early employees, with founders, with investors, coming straight to your to wherever you listen to podcasts, and then also on X through our own personal accounts, uh, Taps, Arpan Punyani, and then at Garuda VC.
Absolutely. You have that sweet little X handle there, right? Is there a story behind that?
Mine. So last name is Taparia. My friends call me Taps. I was RK Taparia on X or Twitter for a long time. Saw that Taps was available, and so I just switched. And it's been that way ever since.
Very cool. Very cool. TAPS is actually the acronym of the school I went to,
Oh, really?
The Army Public School. That's
Nice.
that's called TAPS. Yeah. So
That's funny.
awesome. Great having you on, Rishi, on the podcast. Finally, we did this, and excited to get this out. And I wish you happy investing.
Thank you so much, Prashant. Great to chat today.
Likewise. Thank you.